FOMC week is here and everyone thinks they know what happens when the Federal Reserve cuts interest rates. SPY goes up, right? Well, not so fast. I went back, had a look at the data, and what I found might actually shock you. What's good, guys? Julian here, and in this video, I'm going to be walking through what rate cuts could mean for SPY right now, plus what I'm seeing in the US dollar index, gold, and Bitcoin. I'm going to be also showing trade setups that I'm watching this week. And by the way, some of the targets I called in last week's video already got hit. So if you want a full picture before making your next move, grab your notebooks and let's get into it. Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video. Now, if you look at SPY, you can see that it has been creating higher lows and higher highs, aggressively pushing up higher and higher, so much so that it smashed through even my take profit one area that I was looking at. Question is, will SPY continue to go up? So as we approach FOMC week, let's take a look at some of the data from last week to see what we can make of it. So last week, September 11, we actually had CPI data, which stands for Consumer Price Index. For those who are new, CPI measures how much prices of everyday things like food, gas, clothes, rent, go up or go down over time. Think of it as a cost of living thermometer. If CPI goes up, it means inflation is rising and things are getting more expensive. If CPI is flat or goes down, inflation is low or prices are stable. So in the last CPI report, it actually shows that CPI rose 2.9% in August from a year earlier, matching economists' forecast that the prices would pick up slightly as President Trump's tariffs filtered through the economy. And in a survey done by YouGov, 55% voted that the condition of the US economy is in a bad state, while only 39% voted that it is still in a good position. So despite the rise in inflation, Seema Shah, which is the chief global strategist at Principal Asset Management, the Fed is likely on track for a rate cut next week. If you have a look at the Fed Watch tool, it also clearly shows that there's a 93% chance of the Federal Reserve cutting interest rates from 425 to 450 basis points to 400 to 425 basis points, while 6.6% predicts that the Fed will cut further interest rates to 375 to 400 basis points. Having a look at the Fear and Greed Index, we can also see that the market is still in a neutral position while waiting to see what's going to happen during FOMC news. So coming into FOMC week, let's have a look at some of the data right here. This week, we have core retail sales on Tuesday, September 16 at 8:30 p.m., while on September 18, 2 a.m. and 2:30 a.m. local time, we will be having the FOMC press conference, which the Federal Reserve will then announce whether they'll be actually cutting down interest rates or not. So the big question is that what will actually happen to SPY after interest rates get cut? Most people would think that logically, if the interest rates were to be cut, this will encourage more borrowing and spending, which in turn may spur the economy as more money gets circulated in the economy. However, my question to you is this: did you really fact check this, or is this something that you think? So I went back to look at what happened immediately after rate cuts was announced, especially 1 to 2 weeks after, and the results will surprise you. As you can see, these were the previous dates of when the interest rates were cut, and I went back all the way to 2019 because before that, the last interest rates that were cut was in 2008. So that data was too long ago, so I did not take that into consideration. So as you can see, as soon as the rate cuts announcements were in, the S&P immediately plunged about 6%, 6.5% to be exact, before continuing its way up higher and higher. So let's see whether this pattern continues for the subsequent rate cuts. On September 18, 2019, another cut of 25 basis points was announced. As soon as the Federal Reserve announced the rate cuts, SPY plunged 6% before reversing and heading higher. The next rate cut was announced on October 30th with a 25 basis points cut. However, this time was different. Instead of plunging down, there was a rise of 2.7% within the first 2 weeks of the announcement. However, this time there was no pullback and SPY kept rising higher and higher. Then came the big C during March 3rd, 2020. And this time there was actually 2 rate cuts, so I combined it into one. As you can see, as soon as the rate cuts announcements were made of 50 basis points and 100 basis points, SPY plunged all the way down, going down a total of 30% before continuing its way up higher. Now, if you take a look at September 18, 2024, where 50 basis points were cut, you can see that this time the S&P 500 went up instead, going up by about 4.5% in a span of 1 month. Now let's look at November 7, 2024. This time the rate cuts was actually announced right here. However, SPY rose a little before plunging down by 2.67% before shooting up after that. And on December 18, you can see that as soon as rate cuts was announced of 25 basis points, the S&P 500 plunged down, in total going down by 5% over a span of 1 month. So the question, does the markets really go up or down after an interest rate cut? Based on my research, 6 times out of the 8 times, the S&P 500 actually plunged down before eventually heading up. Only 2 times the S&P did not plunge down, but headed up. So in conclusion, we can say that most times the S&P 500 would dip a little before continuing its way up. Over the long run, of course, the market will always keep rising higher and higher. And considering that September is always the month with the poorest returns for the S&P 500, hey, this is again your opportunity to grab some of the stocks that you've been eyeing for so that you can ride the wave up. So now if S&P were to fall, looking at the 5% drop, I do expect it to head down to somewhere around this area where I will be looking to add in some positions before continuing its way higher. Now, if it does go up, my next target would actually be 673. Now, let's have a look at some of the Max 7 stocks. So when I did the video last week, Google was actually pushing up towards my TP of 238.9. Towards the end of Friday, it started pushing up and it's actually almost close to my target TP, which is about 238. And on Tuesday, it absolutely smashed the take profit area that I called it and started flying even further. Julian, where's the next area that you're targeting Google to go towards? Now, of course, I'm hoping that Google does give us a chance to pull back before continuing its way higher, because in the last 3 days, it now shows that the buyers have weakened. So I do expect a slight pullback before continuing its way higher up. And the next target I'm hoping for Google to go to would be 294.5. Now let's take a look at Nvidia. Nvidia is still yet to reach my target area of 193. And considering how Nvidia gapped up above, I want it to actually break past this resistance to continue its way higher to my target of 193. Let's take a look at Amazon. Amazon is now playing at this level of support and resistance. And for Amazon to go higher, I need this support to actually hold. If this support breaks, Amazon is likely to head down to this area. But if it holds and it pushes up, I would say the next area that it will go to would be back to its all-time high at 240. Meta is also in a good position, seeing how it closed above the resistance last week. I'm hoping that Meta would be able to go up to the all-time high of 785 in order to continue its way higher up to my target area, which is 902. Of course, there's still a long way before it reaches there, but let's see how Meta does with it. Microsoft, another turn of event. Last week, it kind of gapped out at the end of the week, showing positive signs that it wants to go up. Now, I'm expecting Microsoft to head up to this level of resistance. And if this resistance does hold, it will continue its way higher. But if it doesn't, it may just go down. Let's look at Apple. Apple closed above this resistance. However, it wasn't able to hold the support. It dipped a little bit before going back up to the resistance at the end of last week. So I'm hoping that this breakout continues stronger so that Apple is able to go up higher. If not, it will just go back down to the support. So now let's go into Tesla. Tesla spiked up last week on Thursday and Friday. Now this is good news if you are a Tesla shareholder, and I'm seeing that Tesla will be able to hit up to this resistance at 420, whereby we will be able to see next. If Tesla is able to hold at a resistance, it may very well continue to push up, but if not, it might head down. Now, another favorite that everyone has been asking me to cover would be Palantir as well. Palantir is showing good signs of recovery after playing around this level, and this is something that I mentioned to some of the people that have followed me, that this is actually a very, very good area to get into some positions of Palantir. And as you can see right here, Palantir started pushing up higher, giving a very strong bullish strength on Friday, and I'm looking for Palantir to hit up to this level of resistance at 183. Now, if there's any other stocks that you want me to cover, do let me know in the comments so that I'll be able to look at them in the next upcoming video. And right now, I'll be looking at one of my favorite pairs, gold. Let's see what's going to happen this week during FOMC. So in my last video, when gold was at 3586, I mentioned that I was targeting gold to reach 3610, reaching my target on Monday itself. Now on the weekly, it shows continuous bullish pressure heading up. Now on the daily, you can see that it's still pretty bullish with the exception of a bearish pin bar on Tuesday, indicating that sellers have started to step in. And if you go into the 4-hour, you can see that overall it is still looking pretty bullish. However, there have been some breakout structures in the 4-hour indicating that there may be signs of weakness for gold. So does this mean that gold is topping out? Now, I do share my latest updates and prediction to where gold is headed to in my free Telegram. So if you have yet to join in, I'll leave the link in my description. Quickly click and join in right now. Now, I will be looking for this level here at 3635, which is going to be a very, very important level to see whether this is an area that holds. If this area holds, gold may continue pushing its way up. But if it doesn't, it may very well head down to this level right here of 3622. Now, if this level at 3622 breaks, you can see gold very well heading down to 3597. However, if gold does rise, one of the key areas that I'm looking at is 3655 is gold. If gold is able to break past 3655, we can see that there are opportunities for gold to rise even higher. The next area would be 3665, and if it's able to break out of this 3665, it will very much go higher. To be honest, my bias on gold would be bullish, considering how whenever there is a interest rate cut, markets will be uncertain, which means that this will lead to US dollar falling and therefore gold rising. So I will still be looking at entering in some bullish positions at some of the key levels that I mentioned just now. Now, finally, let's look at Bitcoin. So in my video last week, Bitcoin was at 111,000. Bitcoin is still staying strong at this weekly resistance right here, indicating that it still has buying power pushing upwards. So if you have followed my trade idea, Bitcoin had rose about $5,000 or about 4.83%. And if you're not, what's the point of me creating these videos if you don't follow any of the suggestions that I give? Right? So what I'm looking out for right now is for Bitcoin to break past this level of resistance. If it is able to break past this level of resistance, this will be the next area to look at. If it does break that, this will be the final area to look at. And if it does reach this level and break it, we can see Bitcoin reaching all-time highs back again. However, if it doesn't, it will actually start heading downwards. Now, my bias for Bitcoin is also bullish as with gold, because looking at the US dollar index, it seems to be pretty bearish, and I'm expecting the US dollar to fall down even further down to this level of support. And as you guys know, if the US dollar goes down, Bitcoin and anything against the US dollar like gold will tend to go up. Now, I hope videos like this have been helpful for you guys. And if you love to see more videos like this, remember to like and subscribe so that I'm able to produce more content for you guys. And if you want to see one of my gold strategies that has an 81% win rate, do check out this video somewhere around here. And I look forward to seeing you guys in the next video. Bye-bye.